Are we clear with all these filing statuses, everyone? Okay, let's do MCQs on this. So if I go to filing status, there are 19 MCQs here. I think 2 MCQs in this are about tax return filing dates. So we'll do the 17 MCQs which are only on filing status. So we'll do all the MCQs on filing status we have today. And I want you to answer it and mark yourself to see how proficient you are on the topic now. Right? In which of the following situations may taxpayers file as married filing jointly? Taxpayers who were married but lived apart during the year? No. You must not be, again, taxpayers who were married but lived apart, they're not separated. They had to live apart. They could be living apart due to, other reasons. Let's say they have jobs in different states or different cities. So can they file married filing jointly? Yes, they can. That doesn't seem to be a problem. Taxpayers who were married but lived under a legal separation agreement at the end of the year. Legal separation agreement. Yes, married and neither divorced nor legally separated. They are legally separated and therefore cannot file married filing jointly. They were divorced and cannot file married filing jointly. Taxpayers who were legally separated but live together. Okay, you're legally separated but you're living together. You cannot file married filing jointly. You are not allowed to stay together, but you cannot file joint return now in this case. Because legally you're not allowed to stay together. Legally you're separated. So again, you cannot file a joint return in this case. So the answer in this case would be A. Does this make sense, everyone? Neither divorced nor legally separated. B and D legally separated. C is again divorced. Which of the following are among the requirements to enable a taxpayer to be classified as a qualifying widower or a surviving spouse? A dependent has lived with the taxpayer for 6 months? No. The dependent must live with the taxpayer for the entire year. For the entire year, not for 6 years. For surviving spouse, entire year, not 6 months. And again, the taxpayer has maintained the cost of principal residence for 6 months. No. Again, it's not just principal residence. Think about it, right? The taxpayer must provide over 50% of the support. Over 50% of the support. Not just cost of maintaining the residence, over 50% of the support. Try to understand that. 6 months of maintaining the household doesn't imply that you have maintained over 50% or you've provided over 50% of the support. Let's just say, even if the expenses are evenly accrued, if you maintain the household for just 6 months, you are just providing 50%, not over 50%. So therefore, neither 1 nor 2 will enable you to get qualifying withdrawal. Neither 1 nor 2. Are we clear why neither 1 or 2 will make it available to you? First of all, the dependent has to live with the taxpayer for the entire year. And again, it's not just for 6 months. It has to be 50% of the support, more than 50%. So first of all, 6 months doesn't tantamount to 50%. And even if we were to assume that expenses are evenly accrued every month, even in that case, right, 6 months will just reach 50%, not over 50%. 4 years ago, when Cox's spouse died, okay, 4 years ago when Cox's spouse died. So here, let's say we are in 4, let's say we are in year 5, 4, 3, 2, 1, right? So when the spouse died, Cox filed a joint tax return for that year. Okay, in the year of death, joint tax return, married filing jointly, right? Cox did not remarry but continued to provide full support for a minor child who has been living with the Cox. What is the Cox most advantageous filing status for the current year? What is the most? So did not remarry but continue to provide full support for a minor child who has been living with Cox. So 4 years have passed. So probably, let's say, if we assume, the question hasn't mentioned, but if we assume the child is related for the next 2 years, Cox can file as surviving spouse. But again, for year 4 and year 5, let's see, it's a minor child, so less than 19. Resident of US, Mexico, Canada, I think we can assume it, no joint return. And Cox is providing full support, so over 50%. And again, lived with the taxpayer, living with the Cox for the entire year. Okay, so lives with the child and there is no income limit. So this child would earn Cox. The best status available to Cox now would be head of household. That's the status this child would earn Cox. The next one, a couple filed a joint return in prior tax years. During the current year, one spouse died. The couple has no dependent children. What is the filing status available to surviving spouse for the first subsequent tax year? Okay, now a couple filed a joint tax return in the prior year. During the current tax year, one spouse died. So in the current year, right? So prior year, they can file for married filing jointly. Current year, which is the year of death, again, married filing jointly. They have no dependent children. What is the filing status available for the first subsequent year? Because there is no dependent, after that, this is the year of death, after that must file as single, because there's no children, so you cannot have surviving spouse or head of household. You're no longer married, so you cannot use married filing jointly or married filing separately. So what you're left with is single status. The answer is C in this case. The next one, a husband and wife can file a joint return even if the spouses have different tax years, provided that both spouses are alive at the end of the year. No. To file a married filing joint return, first of all, you must have the same tax year. Tax year must be same. You cannot have different tax years to file MFJ. The spouses have different accounting methods. Yes, you could have one spouse who's using cash accounting. You can have another spouse who can be using accrual accounting. And you can calculate income indifferently and include it. That works. Either spouse was a non-resident alien at any time during the year, provided that at least one spouse makes the proper election. No. If either of the spouse is a non-resident alien, you cannot file married filing jointly. You can't file a joint return. So C is out. They were divorced before the end of the year? No. You have to be married and neither divorced nor legally separated. So A, C, and D, you can't file a joint return. B, you can. A spouse died on December 31, year 1. The couple had no dependents. What should be the filing status for the spouse in year 2? Single, again, no dependents. In the year of death, you can use married filing jointly. But because no dependents, you can't use joint return and you can't use qualifying widower. And because you're no longer married, you cannot use married filing jointly or married filing separately. So what you're left with is the single status. Because there's no dependents, you don't have these available, and you're no longer married, you don't have MFJ or married filing separately available. The next one, for head of household filing status, which of the following costs are considered in determining the taxpayer has contributed more than one of the half the cost of maintaining the household? Food consumed in the house, yes, that is. Value of services rendered in the home by the taxpayer, that is not. So let's say if the taxpayer is, let's just say, cleaning the house, the value of the cleaning done by the taxpayer, that is not included. So let's just say when you decided whether the taxpayer provided 50% or more support, let's just say in a year, the taxpayer has spent, let's just say rent, let's just say 30,000, right? And again, the taxpayer has spent, let's just say food, 20,000, and total expenditure for keeping the household is, all the expenditure included, total expenditure is $80,000. In this case, taxpayer has provided more than 50%, has provided a more than 50% cost of maintaining the household. Now, in deciding this, the value of food is included, the value of food consumed is included. What is not included is value of services rendered in the home. So let's say the taxpayer is doing the cleaning of the house, right? The taxpayer is, let's say cleaning the garden, cleaning the backyard. That cost, that's an imputed cost, that will not be included. So yes, for food consumed, the value of the food will be included. Value of services performed with the taxpayer will not be included. Are we clear with this? Yes, Daniel, go ahead with your question.
Hey, this seems like small fish. Like the IRS, like under an audit, do they really care?
I don't think so. It's very difficult, right? It's very difficult for them to go about it. and establish this. Even I haven't come across cases where it has happened, right? Because how do they establish, right? But I think, let's just say, if there is a very clear cut dispute, let's just say, okay, hey, the taxpayer has included the value of services. I think what IRS will do is IRS will not go and investigate. What IRS will ask the taxpayer is, okay, hey, you have gone for head of household status. We don't see that you're providing more than 50% of the support for maintaining the household. Why don't you provide us the, proof? Why don't you provide us the documentation to see that you're providing 50% support? And in that, if the taxpayer is including the value of services they have provided, then the IRS will exclude it. I agree. It's very difficult to assess. It's very difficult to establish, right? What is the value of the food consumed in the houses, right? We might not keep a proper accounts of it. So IRS would also impute certain values. There would be certain estimates there, right? But again, it's very difficult to estimate. I'm not sure how many IRS audits has gone into this specific application of the status, that okay, hey, is it 50% or more, to determine it. Because I think what they would, and again, I'm not speaking from any practical experience here. I don't have any first-hand or second-hand experience on this. What I'm guessing, right, and what the logical step would be is, just by assuming, seeing the nature of the relationship, right, seeing the nature of the occupation, they can assess, is the taxpayer providing 50% of the household or not. So that's how you will. Thompson's spouses died in year 1. Thompson did not remarry and lived alone. What is Thompson's year 2 filing status? Again, no dependents, so no surviving spouse, no head of household. No longer married, so no married filing jointly, no married filing separately. So the status available is single only. Make sense with this, everyone? Okay, we'll do the next ones. The Mercers are a married couple. This is a very good question. Are a married couple with one 15-year-old dependent child residing in state A. State A requires individual taxpayers to use the same filing status on their state income tax return as on their federal income tax return. So the state A requires, if you're using a status in your federal tax return, the same status should be used in state tax return. Same status. So if you're using married filing jointly in federal, use married filing jointly here as well. If you're using married filing separately in federal, use married filing separately here as well. You can't mix match. Before considering the earned incomes credit, right? The Mercers aggregate year 1 federal tax liability is 1640 for married filing separately. Federal tax liability, right? 1640 for married filing separately. And 1940 for filing joint return. 1940 for filing joint return. If you file the joint return, it's 1940. Again, the Mercers aggregate year 1 state income tax liability is 500 for filing separate returns, 500 for filing separate returns, and again 1000 for filing joint return. 1000 for filing joint return. Right? Which of the following statement is correct? The Mercers may use the married filing separate status only if they're legally separated. No, you can use married. You cannot use, first of all, married filing status if you're legally separated. You cannot use that. To use married filing separately as well, you have to be married. You have to be married and not legally separated or divorced. So you have to be married and not legally separated. These are married individuals who elect to file separate returns. Right? So 1 is incorrect. It is most advantageous for Mercers to use married filing separate returns for year 1. What is the total tax liability if they use married filing separately?